Going, this is Stock Screamer. Lyft, the ride-sharing company, has filed the initial paperwork to go public probably in the first half of 2019. We're going to talk about what we know and what the potential outlook is for the stock. But before we do that, I would ask you to please subscribe to our YouTube channel if you have not already. And if you have already, I thank you for being one of the very few that have. Now, Lyft has filed its initial paperwork with the Securities and Exchange Commission that basically says that they want to go public. They are going to have, sort of the SEC do their due diligence and, kind of set the process in motion here to go public. We don't know exactly when, but generally based on the timing of this announcement, probably in the first half of 2019, maybe even in the first quarter, but we don't know anything more. Overall, we don't know much. We know that they want to go public, but we don't know how many shares they might issue. We don't know what the price of those shares may be. They're basically saying, yes, we want to do this, and more information will be forthcoming. So since we don't know those things, what we can look at is sort of the valuation of the company has been in the private end of things with private investors. And according to an article I read today, the last significant investment in Lyft came in with the company being valued at $15 billion, which is kind of amazing for a company that's not even the leader in its industry here. So the leader in the industry obviously is Uber, Lyft's main rival, and they should be doing their own IPO in 2019. Their last valuation, from what I can tell, was $70 billion when they last significant investor put money in. So obviously significantly bigger than Lyft. So it will be interesting to see how Lyft does in the market. And this probably also shows you why Lyft was maybe in a hurry to get to the, on the stock market before Uber does, because I think Uber may be the more popular of the two. But Lyft getting in there beforehand may be a way for them to generate more money than they could have if they got there after Lyft. So based on the little we know, what should you think about, Lyft stock when that IPO happens? Is that a stock that you want to get your hands on, or is it something that you really want to, stay away from? Both Lyft and Uber are losing tons of money, so they're raising money basically, to keep themselves going and to continue to fight for market share and to, even kind of go into, industries that are connected to ride sharing. Basically, not only to go up against each other and get market share, but to become sort of the dominant names in, their industry and in, maybe transportation in general, you could even say, so that maybe they can keep at bay some of the other companies that maybe would, want to jump into this space. Maybe Google, maybe Amazon, maybe a company like that decides, that they can make their way in here too. So if these companies, Lyft and Uber, can get to the public market and they can get enough money and they can get enough market share, they're going to become the dominant names, and it's going to make it less likely that another big company is going to, get in there. However, that means they're going to continue to lose tons of money. So as an investor, if you're putting money in, you are really sort of, you're thinking of the stock, potentially in a number of ways. Number one, if you're thinking that you're going to be a long-term investor, you really are buying into the idea that by, spending all this money, continuing to lose money, that Lyft is going to continue to be a player in this market, and that they are going to, not only get market share, but that they are also going to, remain a dominant name and not fade over time. So you're going to let them continue to lose money as they continue to build their brand and continue to try to, be here in this space. If you buy the fact that they're sort of transforming transportation and they're going to be a leader in that space, then you're sort of telling yourself a story that they can continue to lose money because eventually they will get to a place where they're profitable. Now, the other story you may tell yourself, and it's probably the story that I'm more likely to tell myself if I were to buy Lyft stock, is the fact that they are number two by a significant margin under Uber, which means I talk about the fact that maybe they're going to try and keep other players out, but the truth of the matter is, if you were one of these huge companies like Google or Amazon in particular, and you decided you wanted to get into this space, what would you do? You might try to buy Lyft, because you're obviously not going to go after Uber. You're going to go after the smaller company that has some of the infrastructure, so you've already sort of, you've sort of set the table to compete with Uber and, in related, sort of transportation industry as well. And so now you sort of have a base to work from, and you have the deep pockets, to continue to compete against a company like Uber. Maybe you don't have to lose as much money because you've already got Lyft's infrastructure, and you've got a marketing machine and all that kind of thing. So you really could potentially compete. Now, traders, on the other hand, if you're somebody who's a day trader or somebody that likes to move in and out of stocks, you might like Lyft and eventually Uber by the fact that there's probably going to be a ton of volatility when you're talking about companies that are trying to build up and are willing to lose a ton of money to get there. Then that probably means that stock is going to go up and down as sentiment changes. Every time there's new news about these companies, a big win or a big setback, that stock is going to kind of swing pretty wildly because there's not a profit. There's not a profit picture there to go off of and just sort of dismiss those things. Every bit of news is going to, affect that stock. So for me, I'm kind of excited about it. Like I said, probably more so for the idea that, getting some Lyft stock, number one, could mean that eventually Lyft is going to get bought out. But the other piece of it also is that both Lyft and Uber, and maybe I'm more excited about Uber for this piece of it, there's only so many companies that come along that you could see them eventually getting to a place where they are, they can move into so many different industries, the way that Amazon has and the way that Google has. And I think these companies, especially if transportation continues to, transform in the way that many people think it's going to, you could see these companies getting into a lot of different areas. Uber's already got the perfect name for it. You could see, everything Uber there, the way that Amazon puts their name on everything, anything could be Uber. You could have Uber ice cream in the future. Who knows? It's a name that you could attach to anything and really move into a lot of different industries. So it's interesting to me for that perspective, in the idea that these companies, if they have a big enough name and they get market share there, they are sort of in a space where they can move into a lot of different areas. And so that's something that's obviously appealing. You only get so many chances to really go after a company or be able to buy shares of a company when it, is still sort of in its infancy, and then, sort of see it blow up into so many other industries. So these companies have the potential. Obviously, there's a rocky road to get there, but it is interesting to me for that reason. So would love to hear your thoughts on the Lyft IPO and the potential for Lyft and Uber stock in general. Leave them in the comments if you will. Otherwise, thanks for watching, and I'll see you next time.